Understanding how to read the price action is going to be crucial for you to make money from the markets. So today I'm going to cover bar charts. That's right. What it shows, how it's calculated, and the key things that you need to know in terms of open, close, high, and low. So if you're ready, let's get cracking. So we're going to take 7 days worth of data. This is representing Monday to Friday. Now, one of my favorite quotes from my book is from chapter 5, is from Leonardo da Vinci. Simplicity is the ultimate sophistication. So we're going to keep it really, really simple in layman's terms today. And by the way, you can now download my book for free. It's in the description. Got some real gems in here, published in 2017, but still really relevant. So when we're looking at this, what we want to look at is we've got 7 bars. This bar represents Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. Now, what this tells us is that the bar, it started here, the price started here, it moved low, it moved high, and it closed over here, and then it went into Tuesday. But what I'm going to show you is how all of this information can be reflected in one bar. What do you mean one bar, Jigir? It can be represented in 1 week. So when I say we have a weekly chart, a daily chart, basically, the weekly chart is taking 7 days worth of data, Monday to Sunday, and representing it in one bar. That allows us to look at the macro picture, as in the pattern position, so we know when to buy, when to sell, and when to stand aside. The same is true for hourly to daily charts, where there's 24 hours in a day, you can have 24 bars represented in one bar on a daily chart. And that's what I want to cover with you today. So there are really 4 pieces of information. You see over here on the weekly, the little dash on the left, that represents the open price. The low and the high of the bar represents the lowest part of the week in terms of price of the week, the highest price of the week, and the little dash on the right-hand side is the close of the week. So let's just really break this down so it's really, really easy for you to see. So Monday over here, the week opened, and that is represented by this dash on the left-hand side. Then we have Sunday. On Sunday, we have this dash on the right, and on the weekly bar is represented by here, the closing price of the week. So we're encapsulating 7 days worth of data in one bar. And there's 2 other bits that you really want to know. It's the low. We can see on Wednesday, on here, on the weekly bar, we wouldn't know what day the low occurred. So we can go down to a lower degree time frame, which is the daily chart. And here we can see that the low occurred on the Wednesday and is represented on the weekly bar over here. Where did the high occur of the week? Can you see it? Well, it's the highest point. So it's not here, it's not here, it's not here, it's not here. This one and this one is close, but it's actually the Sunday, and it's reflected over here on this bar. So now what you have is 7 days worth of price data reflected in one bar on a weekly chart. And again, the same is true for any time frame. If you're comparing a 15-minute chart to a 1 hour chart, well, how many lots of 15 are there in 60 minutes? Well, there's 4. So there'll be 4 bars to 1 bar. The most common is going to be the hourly to daily or the daily to weekly. Here we're using daily to weekly. Make sense? So now you know what a bar represents, how it's calculated, and how you can use higher degree time frames and lower degree time frames to get valuable information. So this was some of the core fundamentals and basics. But if you want to learn how to trade and make money from the markets, I've actually just launched the 4 secrets you must know to make money trading the markets masterclass. I actually cover a lot on pattern, price, different things you want to know where you can see what's likely to happen, but using the bar information, the price information on different time frame. This is free, is in the description link below, and it will take your trading to the next level. Let's finish with a quote from my book. I'm going to go to chapter 8 today, and it's Henry Ford, because we can learn from these wise guys, right? The wisdom, and we don't need to reinvent the wheel. And what he said in one of his quotes is, "It has been my observation that most people get ahead during the time that others waste." So learning the foundation, the basics, the bars, and so on and so forth is going to be really, really fundamental. But then you want to upskill yourself one thing at a time. It's like driving a car. Everything is difficult before it's easy, but with practice and repetition, it becomes second nature. And if you want to make money trading the markets, you need to really understand that it's fear and greed that drives the markets. And the price action, what we looked at today, is reflecting how the crowd psychology is feeling and how the crowd is feeling. And then we can see what the edge is. Is it likely to go up? Is it likely to go down? So we know when to buy and when to sell. So check out the masterclass, download the book, and I'll see you soon.